Hey guys, Sports Awesome BK Force. Welcome to our Forex weekly technicals for 12/16 to 20. Can dollar yen hit 105? As always, trading foreign exchange on margin carries a high level risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading in margin and to seek advice from an independent financial advisor if you have any doubts. All right, let's take a look at the charts. And of course, let's start with dollar yen today because I think that was the key story of the week, especially as we closed out the week. We had a lot of interesting two-way movement. Let me just adjust the chart here, bring it down a little bit. A lot of interesting two-way movement here in dollar yen where we tested the 103s, came back off the 103s, ran through the 103s a little bit later yesterday, and then today went through the the annual highs, and then came back down. Just could not hold ahead. The annual highs came all the way down to 103.16. And it's really interesting because, of course, the 104 level was a big resist level. There was a tremendous amount of, here's the weekly chart, you can see it. There was a tremendous amount of offers at 104, which kept dollar yen kind of compressed. So now we're at a very, very critical juncture because essentially we are really at a point of either a double top, and if that were the case, then I think, of course, we could unwind all the way out, possibly back to 100, or we make a couple of more consolidation efforts here and try to break through. A break of 104s does put us very, very firmly on the path towards 105, perhaps even stronger. But as you can see, you have this big, big move, consolidation, and then a test of the highs here, which usually always take a couple of times to kind of resolve. So I think it may take a couple of days for us to see how well we trade around these levels. For the time being, if you go on the hourly charts, you basically see that we have sort of the capped by 103, 103.90, and contained by around 102. So as long as we stay within this 103, basically 103.80 to 102 zone, it's consolidation. We start breaking the 102s, it looks much more like a turn and double top formation, basically a failure. Now, with yen circling itself around the yearly highs, next week, of course, with the FOMC meeting is going to be a big week, and it's going to quite a lot may depend on that meeting. If they signal that, yes, they're ready to taper, perhaps as early as January, we definitely have a chance to run through the 104s, possibly even at that point run through the 105s. If they back off, if they hem and haw, we could see the move all the way out to 102s, and disappointment could even take us all the way out to 101s. 100 still, I think, is a critical support, and that's going to take a bigger story, I think, to crack. So we broke out from the 100. We may come back all the way down here, consolidate further if we don't have a definitive move on a taper next week. So for now, dollar yen, I think, is still the central part of the story in FX, and the fact that we're hovering around these yearly highs, very, very interesting, both from a price and a story perspective. Euro, on the other hand, also kind of consolidated, also may have presaged a double top here. This 38, as we had said last week, was going to be a very, very tough level to break, certainly on the first try. And indeed, they tried a couple of times. 3 days in a row, they tried to break to the 38s. 3 days in a row, there were offers well ahead of the 138.30 highs, and the pair came back down off the highs. There is very little on the fundamental side that makes you want to buy the euro at this point. The region is still in essentially economic recession. There is deflationary threats all the way throughout. And the ECB and everybody else is basically moribund. They're really not doing much to stimulate the economy. So what's pushing the euro higher at this point is primarily investment flows. Everybody's chasing European equities. There was about 4.5 billion inflows into European equities last week alone. And you have this relative valuation bet that's happening, but it's at the end of the year, and it's pretty much, I think, the end of that bet. Once that bet dies down, it's going to be very interesting to see how far more the euro can extend. For now, of course, this 38.30 is a key level. So if that gets broken to the top side, whatever fundamental arguments you have, you're going to get steamed and rolled over, and we're probably going to 39s, maybe even 140s on extension. If, on the other hand, we can't really push up here, the natural path then after this is going to be a breakdown and a test of the lows. So we'll break the 37s to the downside, but I think the real test will probably be around the 36s, which was the level where we consolidated for basically a week and a half here, and we broke out higher. So if we do come back, I think if 37 is given, double top is really in place, and then you have the next target of the 36s. If, on the other hand, we can come back and hold the 38s, then it's a whole different story, and we're looking possibly 39 140s to the upside. Cable is signaling a steeper correction already. Cable always kind of, I think, runs ahead of everybody. So cable, we talked about the fact that it ran out of steam at 164 a good week and a half ago. Really couldn't muster much of a run. Came back to do very tepid. Fresh year highs at 64.60. Again, died in front of the 65s. And then for the last 3 days, it's just been doing nothing but correcting. Into the 62. 62 is the support area here. And if we do come in, there's probably going to be buyers around 61.50 or right underneath that level. And we may see some further consolidation. But for now, cable was the early signaler of exhaustion, and it's very much smack dab in the middle of its corrective phase at this point. And of course, Aussie was the one that got slapped the worst, got essentially decimated last week. A couple of things happened. So we had relatively positive labor data that was ignored by the market. And then on top of that, Glenn Stevens from the RBA again suggested they want to see the currency at around 85, basically jawboned it down. However, as we stand now, this is what's interesting. This is the third time we're here at this 89 level this year. Basically, 88.50 is the absolute low. 88.42 or so, somewhere around there. And 89s are triple bottom type of holds. And today you saw that they couldn't break the 89s. If they can't break it, they're going to squeeze it back up and short squeeze you to death the other way around. We'll see if we can push ourselves over to 90. The really, really big resistance level here, if you go in the 1 hour charts, give me just a second, is this whole 90.50. Basically, 90.50 to 90.80 is a big resist level on any kind of a move back up, and I think it's going to find a hard time trying to clear it on the first run here. But up until then, through 90, maybe even 90.20, is a possible run for the Aussie after a really, really big drop-off that we've had over the last couple of days. So Aussie looks like it may have found the third bottom for the near term. If, however, and this is a critical thing, we start to turn south one more time and we do break 89s, then really this 88.50 is a huge test level. There's clearly going to be probably some bids underneath here just to see if they can hold it off finally. But if that's given, we're looking 88 and really possibly, I think if 88.50 basically is given, we're looking to 87s before you find any kind of buying power to hold the Aussie off. There will be tremendous amount of, I think, momentum selling through those levels if we can clear, because that would be a break of the triple bottom here. That would be a significant move. As to the crosses, the story really has been on the crosses very much over the last several weeks. You see Euro Yen kind of holding out again. Sort of the stall here is due to the Yen component. But we did make fresh highs here at around 142, almost 143. Euro Aussie was really the trade of the week here until we finally cratered a little bit here today. So Euro Aussie went to 154 after it paused here at 150 level, never corrected. I think one of the interesting things here is you can certainly try to call tops 100 different ways in a row, and I tried this with miserable degree of success last week, although we didn't get triggered on any kind of sells in Euro Aussie because our sells were below 150. I think if you sort of reset the same structure where, okay, you don't know if it's going to turn, but you'll feel a lot more confident that the turn is in place if the 52.50s are given somewhere around here, then I think then you definitely do have a potential of a correction all the way back out, certainly to the 52s and quite likely all the way out to the 150s. Remember, this is a huge extension, certainly deserves a little bit of a correction. If you were to do sort of a simple, very easy Fibonacci retrace, so this is around 40 against 54, that's almost a 15 handle move, so a move of 5 handles, which is about a third of the move. Very rough math, but good enough for government work. Should take us down to 150 on a corrective phase. We'll see if that even begins to happen. But certainly Aussie, if it can hold this 89 and starts climbing itself back up while the euro begins to correct, this may be the stealth trade of the week next week, and certainly worth watching, especially as we start the week next week, to see if we get Aussie strength, euro correction, and perhaps a move back through the into the 52s that can take us all the way down to 150 on a full correct mode. That's kind of how the week shapes up. I wish you guys the best of luck and the best of trading. The Sports Schlossberg for BK Forex, over and out.